Alrighty, hello everyone, and welcome to a fresh episode of the Imperial Wealth Crypto Chronicle Podcast. We actually have a special edition of the podcast this week. We have a special guest, Patrick. Welcome, Patrick. He is a residency expert on both AI and tax, and I thought it would be a really cool, interesting time whilst artificial intelligence, for those that don't know what AI is kind of flying around the world, isn't it, Patrick, with NVIDIA and everything else coming to light. We've got ChatGPT that's almost ruling the world, isn't it?
Yeah. Basically, everyone's using it to do their jobs now.
Don't expose me like that too quickly. But where I met Patrick was we actually met through CoinStash, which a lot of our listeners are familiar with. CoinStash is our Australian centralised exchange partner. I've had Simon, who's the COO, I believe. I might have got that wrong, of CoinStash on him before. I think I'll be getting Simon on again to argue a few things with him over. Patrick does come from the lounge, so I've dragged him out of distracting him there and bringing him on here. So thank you for being our second guest, and I think actually our first visual guest, because I believe Simon was only audible, so appreciate that.
Oh, prime. Yeah, glad to be here. Thanks for having me.
No worries. So I thought we'd just get into it first, just a bit about yourself, how you got into crypto. Obviously, you've probably been in it a while, and really just how you see things right now. That'd be good.
Yeah, of course. So I got into crypto when I was 14, so still in high school. I started a economics class, and I was trading stocks in like a share market trading game.
Yeah.
And basically, I actually ranked quite highly in like the state. I didn't come first or anything, but I was like, oh, this is cool. Maybe I should do it with some real money. And basically, I tried to get into investing in shares, but you have to be 18 in Australia, or you have to like set up a trust with your parents. So it turned into a bit of a disaster.
Yeah.
And on that journey, I discovered Bitcoin, which was also quite difficult at the time for me to buy, but eventually I found local Bitcoins. So I bought my first Bitcoin off there. And yeah, sort of got into Ethereum quite early as well.
Yeah.
Which was super exciting. I mean, I didn't fully understand the tech like I do now. I just sort of thought it was like, I was trading shares, except like I could get into them without being 18 sort of thing. That's kind of how I saw it. And then, sort of, went through the whole bull market of 2017, made a lot of money, lost a lot of money for a 16-year-old, which was sort of my first taste of that. Left school and I got into an anti-money laundering job with the banks. And I really quickly discovered that they're essentially losing like all their money to crypto scams because their heuristics didn't pick up on 92-year-old Dorothy buying Bitcoin at 1 a.m. So I helped them a bit with that, and that gig lasted for about 9 or 10 months, and then I got a phone call one day from Shane from Crypto Tax Calculator, Aussie startup, and joined the team. I think I was like maybe one of the first 10 hires there. So that was about 3 years ago now, and been with them ever since. So solving the problem of degen taxes, and in between I have a few sort of side things going on. And so I'm the lead Australian crypto writer for Forbes. And I also have more recently started researching and writing about the intersection of AI and crypto. So yeah, super excited to be here. And I guess on my outlook on the market, you could say I'm uncomfortable in spot right now.
I think most people are, self-admittingly.
I've seen a few memes on Twitter of medieval torture devices being posted, and I'm sort of feeling that. But no, I mean, I'm definitely a long-term bull. I think the Ethereum ETF, once the S1s get approved and they start trading, like I do personally believe it's going to be a very successful product. The marketing machine of these massive companies is not going to let them fail. They're going to, pump them out there, and they're going to collect their fees. So I'm a strong believer of that. And I'm sort of excited for that to happen as well. Like given the sort of situation in the market the last few months, it's been very PvP with the
Yeah.
meme coins and
Yeah.
very value extractive. So yeah, I'm sort of excited to
Yeah.
move to a more like I guess a healthier stage of the market. Yeah.
Yeah, I agree. I think we'll return to that part of the conversation soon. But just going back to AI, and obviously you spoke about how you were into crypto early, and then obviously you're with Crypto Tax Australia, and now the lead writer for Forbes, obviously, and then with on-chain outpost. So, I just wanted to find out what initially drew you to that kind of intersection of AI and crypto. Was it obviously you knew about crypto first, but was AI just something that you came across and you found heavily interesting, or did someone reach out about it, or is it just something you saw as the future in crypto, or?
Well, I've been very interested in AI tools, like just purely as a consumer for the past couple of years. Like I've been pretty amazed at, the capabilities of ChatGPT or Claude or like any of these AI, like Midjourney, for example. These image creation AIs. So I've been, hammering them, sort of breaking them, like seeing where there's been issues, that sort of thing, for a couple of years now. And I've, just kind of been like sort of amazed, like purely from a consumer side, about what these things are capable of, and sort of been thinking about like, the consequences of that for, I guess, humanity and like people, working in jobs that potentially these AIs can actually start doing better.
Yeah.
So that's been an interest for a couple of years, and then I always knew about AI x crypto projects. Previously I sort of thought them, vaporware, scammy. Like I got into Singularity Net. I think the ICO was back in 2018 or something like that, and it did very well, and then just basically was down only from there. So, sort of how I decided to start researching this intersection. I do it with a colleague. So he has a research background. I'm mainly focused on writing, but we're both sort of degens, and we just saw it as like we wanted to pick an intersection of crypto, like in a sort of certain niche. And we were talking about gaming at one point, and we just looked at each other and like, we're not gamers, to be honest. So so we kind of landed on the intersection of AI and crypto. And at the time we didn't really know, too much about it. It was about 6 months ago, towards the start of the year, and just sort of dived in head first and quickly, learned the basics of AI. And I'm not going to say I'm no like technical AI researcher. I'm a degen through and through. But yeah, it's been a super interesting journey, and I think I've sort of flipped from being, of the opinion that AI crypto projects are all vaporware to, being of the opinion that there's definitely some legitimate projects out there that could make a big impact.
So I guess just on that probably takes me to my next point. Given that you do, well, at least over the last 6 months you've been writing about that intersection, you're probably across the different projects that have come or maybe even gone by now, but the ones that have been around for a while. And I guess with AI it's super interesting because I guess like other narratives and industries, there's also subsectors within that sector. So with AI, there's different tradings, there's GPU storage and lending and usage and whatnot, fraud and security detection to whatever it is. I guess from your understanding of AI as it has been developing in the crypto space, are there any specific areas you think that are more worthwhile looking into than others? Just based on what you've seen so far.
So on the whole, I would say like the AI space is it's very nascent. It's very young. It's like it's almost at the point where I'm like considering, is it too early to actually make a big bet? And that's like been a thing that we've talked about over the last few months. Like there's so many projects constantly popping up, and it is actually, once you get your eye in for it, you can figure out which ones are vaporware and which aren't, and which but the thing is, a lot of them even if they're not necessarily vaporware, it's like considering whether they can actually deliver on what they're saying they want to do. And it's that's the hard part in terms of determining, like, is this project actually capable of doing this, even if they are genuinely trying to do it, sort of thing.
Yeah.
So that's something to consider. But in terms of like a specific, niche like DeepIn, so these decentralized compute networks undoubtedly have PMF.
Yeah.
It's still very early days, and like most of them are not turning a profit. Some of them are valued at like 1,000 times. Like, if you're looking at PE, it's like 1,000 or even 10,000 times.
So the same as every other crypto sector.
Yeah, literally. Literally. So I mean, like in the real world, DeepIn, network companies like computer networks, or even like telecom networks, that sort of thing. Like all this physical infrastructure is worth like, billions, trillions of dollars, and it's like a serious industry. And so like, and it makes a lot of sense for decentralized physical infrastructure networks to exist. It's just about sort of aligning like incentives and also usage, and like creating a fair marketplace that people actually want to use.
Yeah.
So like, I mean, there's a lot of DeepIns getting around saying like, yeah, hook up your MacBook and they're gonna contribute it for AI training. Like, no, that's that's not going to happen. To be honest, it's you need enterprise grade hardware for that sort of thing. So I am bullish long term on DeepIn. I don't have an opinion on who's going to win that race, but there's a few leaders out there at the moment. There's also like sort of more data focused, like the data focused niche.
Yeah.
So projects like Grass on Solana, you might have heard of.
Yeah.
And then also Sinus is one. There's a few other projects building in stealth, but basically data is the oil that keeps AI functioning as well. And it's currently, like, data sets are very hard to come by. Really good data sets are really hard to come by. And it's like definitely
about I don't know if you remember Big Data Protocol from like years ago. It was probably one of the earlier AI projects, to be honest. Yeah. I'm pretty sure they were something to do with data sets and that jazz. I wonder if they are still around, but yeah, anyway, sorry, it just got me reminded me of that project.
I remember seeing that as well.
Yeah.
I'm not actually sure what happened to them.
Yeah, I think they're still around, but just kicking along. Anyway, sorry.
Just kicking along. Yeah. So I mean, the data niche, like the data collection niche, like creating these AI data sets, is definitely something that we're interested in as well. We think it's like there's definitely a use case there. I mean, what Grass is doing is you install a browser extension, and essentially they're using your device to sort of scrape the internet and pull data in a way that's not actually possible from a big data center. So that's another interesting area. I mean, a more recent one that we've been looking into is related to like AI infrastructure in terms of like blockchain rails that will actually support this stuff.
Yeah.
So like sort of like AI enabled, blockchain there could be AI agents basically running around completing tasks for you.
Yeah.
Which is kind of crazy to think about, and it's super early stages of that. So I don't have any recommendations on who could be a winner there, but it's definitely an interesting path that we're heading down.
Yeah. Well, I guess that word agents, that rings a bell for me, because a part of the trading academy that I run, we were fortunate enough in early 2023 and kind of mid 2023 be investors into Fetch.ai pretty cheaply. I think our buy was around 18 cents. Obviously, I can't remember how high Fed had gone. I think as high as $3.50 or $3.30 or something like that. So, unfortunately, being the bull and hodler I am, I'm still holding it down at $1.20. But I guess the big news to come out of Fetch, and well, obviously you've mentioned Singularity. Was one of your first earlier projects that you got into. And so there's been this coming together of the Artificial Superintelligence Alliance, ASI, which I think they've done about 50% of their changeover, where they've gone to the FET token, and then I think that's being completed mid-July. Given a few of the listeners are holding on to that, like, do you see, you said agents, you don't think there's a winner there yet. FET has a bit to do with that, but yeah, do you have any opinion on this alliance? Do you think it's a good thing? Do you think it's a bad thing? Happy to hear honest thoughts.
Yeah. I mean, we did look quite deeply into it back in April, I think it was, when it was first announced, and there was those proposals floating around, basically. So yeah, I mean, my first thing that I'll note is I think they could have done a bit better job of the naming. Come on.
Yeah. I agree.
What is that?
Bit cringe. Yeah.
Yeah, but anyway, I mean, on the technical side of things, like, I remember when they first sort of proposed it, it was very light on the technical detail. It was like sort of like basically, how is this going to work? That was the question that we were constantly asking, and we just couldn't get a response to. And it did definitely seem like more of a narrative-driven play. There has since been, a bit more information in terms of like why, they were pushing for this merger as well, from a more technical standpoint. But basically, what the merge of the three different protocols enables is kind of like a full stack, right? Whereas like each individual piece is, potentially less valuable on its own. So I think there's definitely merit there. I'm not sure. I mean, from a price standpoint, it probably seems like a more of a narrative-driven play, and I think we've kind of seen that with the prices.
Yeah, I can't speak for Singularity or Ocean themselves, as I don't know too much about them, but I do remember kind of back in that early part of 2023 when I was gearing up to invest in AI. Mind you, like, I'm no technical AI genius. I didn't fundamentally make my choice because I thought the tech was better with one than with the other. But to me, it kind of seemed like it was Ocean, Singularity almost kind of giving up, because obviously FET's been the one out of the three that's probably done the most X's, grown the most, made the most strides. And I remember back then I was picking out of Fetch and Ocean as competitors almost, and I went with Fetch. And like, it's funny to see now, a year later, Ocean just kind of joined under Fet. That's how I kind of saw it anyway. That it was more a narrative thing for them to just kind of being like, we'll try and make the most of this here whilst AI is hot. But I can't speak for the tech joining together. But I definitely agree with that at least.
Yeah, that definitely seemed like a bit of a narrative play, I think. So I mean, we'll see what happens. I mean, like, actually joining three different, companies, or if you sort of see them as like functions together, like in and of itself would be extremely difficult. I mean, from a very, just outside generalist perspective. So we'll sort of see what actually goes on there.
So moving on, as going back to what we said at the start, you're obviously part of Crypto Tax Australia, is it? Crypto Tax Calculator, sorry.
Crypto Tax Calculator, yeah.
Sorry, I think Crypto Tax Australia is another company, isn't it? Yes, within
Australia. We won't talk about them.
We won't talk about them. Yeah, okay. Well, obviously the end of financial year's just passed. As I've mentioned, we've got plenty of services that do with trading, investing. Obviously, you said yourself you're a Degen, so it looks like you're building a Degen friendly tax calculator to help people out at the end of financial year. So do you want to just tell us a bit more about this briefly, and how people should be approaching, I guess, tax season with crypto?
Yeah, of course. Yeah, so I mean, I'll give you the brief spiel about CTC. So our founders, Shane and Tim, they were actually trying to build a decentralized exchange back in 2017. So super early days, and they were transacting a lot on chain. Yeah. And they themselves found, at tax time, they had an absolute disaster on their hands because there was no tax software. Even at the time, like Etherscan, CSVs were just a complete mess. It was like almost impossible to, pull historical pricing and that sort of thing. So, they sort of realized that this was going to be a problem for everyone in crypto, especially for the on-chain stuff. So, around the same time, there was a few other competitors spinning up, like especially in the US, and they sort of focused on centralized exchange trading, which is, it's really easy actually, because you can just download a CSV from the exchange, it tells you all the prices, tells you, when you traded between cryptos, all that sort of stuff. Whereas the on-chain stuff's actually the, full disastrous mess, because, you can be jumping into liquidity pools, you can be staking, you can be like doing all this DeFi stuff, you can be buying NFTs, which is a different token type, all this sort of stuff, which in Australia is actually all, triggering taxable events. So basically, Shane and Tim sort of built the product from the ground up to support like on-chain activity and support degens, and that really like took off, 2020 DeFi summer when everyone was piling into like Wi-Fi and all these vaults and Uniswap, the Uniswap airdrop really kicking off all that activity, which was super cool. And then I joined in either I think late 2020 or 2021. Initially just sort of as a janitor / like I was in customer support, helping there, doing a bit of everything, helping a bit with the product. And it sort of evolved into me, helping the product from like a degen's perspective, because I'm usually pushing like 20 to 50 transactions a day. So I'm out on all these layer 3s just degenning hard, and I want the software to be able to support me. So I pass feedback.
Guinea pig.
Exactly. So I pass the feedback onto the product, and we sort of work to make sure that all the degens are supported, and we've got a big focus on accuracy as well. So like we want people to generate. What's the point of generating a tax report if it's not going to be accurate, right? Because if the ATO audits you, you're basically screwed. So we've got a big focus on accuracy, and we like have built this reconciliation, like smart reconciliation engine that basically walks you through the transactions, make sure it's all, tidy. It all makes sense from like an auditor's standpoint. So then when you get a report, you're not overpaying on taxes, and you can be confident that if you do get audited, you can go bang, here's my audit proof report. So that's sort of the thesis there. And I mean, for some tips I have for Aussies, the financial year's already passed, unfortunately. So
you can't
too late
sell
to recommend.
For your losses now. You're gonna have to wait till next year.
Exactly. I've had a few people message me, oh, my NFTs have gone to zero. What do I do? Sorry, mate. The time for that was last week. I mean, that's unfortunate. I mean, remember it for next year. So tax loss harvest, any
could be worth a 10x by next year.
NFTs. Oh well,
hopefully.
Potentially. Yeah. Don't sell any assets that you actually want to keep holding on to. But if you've got NFTs that are gone to zero, or meme coins that have been rug pulled, then definitely offload that so you can trigger the losses. But more generally, like, I mean, there's probably one main thing I would say that is really important in Australia. And it's around like income related to crypto. So like staking rewards or airdrops of tokens that have already been trading. So these like phase 2 airdrops, for example. The ATO, or basically like any sort of yield farming or interest or anything like that, like the ATO basically treats that as income, with the value like that you need to report being the market value at the time you receive it into your wallet. So the issue with this is later, if you go and sell those tokens and they've gone down, yes, you realize a capital loss, but you can't offset the capital loss against your income. So, which is actually really scary, to be honest. So like I'll give you like a super exaggerated explanation, but like I know people who have been in this situation. So like, say you get a $100,000 airdrop, and it's worth that at the time it enters your wallet. The token's already been trading, so it's not an initial allocation airdrop. It's like, a protocol's decided to do a bit of extra marketing or whatever. Anyway, so you get 100K. That's that's the market value at the time you received it. So you have to report that 100K as income, right? But you're a diamond hander, and you're going to hold on to those tokens, and the bear market hits and they go down 50%.
Yeah.
You decide, you're like, screw it, I'm going to take the 50K. You sell. You've just realized a $50,000 capital loss because of the difference between that 100K and the 50. But you still have to say that on your tax return, you still have to include the 100K. So you're paying tax on the 100K, even though you actually only pulled 50 out.
Yeah.
So like in some extreme cases, we've seen people literally, have to pay more tax than the entire value of their portfolio.
Speaking to
which is super
scary
scary
here, potentially.
Luckily, Arbitrum was an initial allocation.
Yeah, that was an initial allocation.
So, yeah. So they're treated slightly differently. It's like full capital gain, but like it's staking rewards, for example. Like people running, if you're an ETH whale and you're running validators, like it's definitely something to consider. Or even the early like Ohm4 guys, like getting in on Wonderland Finance, like.
Well, no, it's interesting.
Luckily, I lost everything.
Yeah, well, we've got, as part of our services, we run a full DeFi course and DeFi Academy, which entails different plays and stuff. But the course teaches all of our members to utilize their spot holdings for staking, for yield farming, for airdrop hunting, for lending, borrowing, whatever it is. So this is super good knowledge to have, and definitely places or stresses importance for those people that do want to clean up their tax, or at least report it accurately, to take these things into account, and at least to go and check out the calculator as well. So I know that's really good info. Thanks very much. I guess moving on to kind of conclude, we'll move past a bit of AI and tax, and kind of going back to what I initially asked you about the market. Is there any other narratives, given you do write heavily on AI and you work in crypto tax, is there any other, I guess, narratives or industries that you're a fan of, or you think will outperform this cycle? Obviously, as you've said, we've had Solana and memes really suck a lot of the liquidity and be that type of narrative that kind of kicked off, and I guess you could definitely say that real world assets, RWA, and AI was probably the two behind that narrative of memes. So yeah, is there anything else? Like, are you a fan of any huge layer ones? Any real world assets out there that are yield bearing that you like? That type of stuff?
I've got lots of different theses, so I'll try not to talk about too many of them. But I think like it's clear that BlackRock and Larry Fink are interested in the whole, tokenizing of assets, like RWAs thing. I'm not convinced about whether they're going to, kick that off anytime soon, but I think that's going to be, like a really strong future narrative. Tokenizing the stock market, like I mean, I'm over in Asia at the moment, and, you speak to people over here and they can't access US stocks, or they can't access like, stock market outside of their own. So, I mean, tokenizing these assets and putting them on chain and giving access to everyone in the world, bullish. I think there's a lot of demand for that.
They already have like $100 million fund they set up on Ethereum, didn't they, or something? Yeah,
that's right. So
that's good.
Yeah, definitely. I mean, I've been in Ethereum since like I didn't get in on the ICO, but I've been in since quite early. So I am an ETH bull through and through. I did get in on the Solana action as well. Which.
Do you have a little thesis there at all between Solana and ETH from here? So I guess a lot of the kind of arguments or what's floating around is obviously that Sol ETH trade, right? And whether capital does now rotate from Sol that peaked early to the ETH ETF. But then obviously then you get, I think that was kind of happening over the last few weeks, and then you get I think it was Van Eck that applied for the Solana spot ETF, so it's just all over the place. So, or do you think they both just go up in value equally?
I mean, it kind of seems like Solana's sort of at the stage that Ethereum was at, like maybe one cycle ago. So I think potentially, there's potentially more upside in Solana. Like if you're looking at it from that perspective. However, I mean, especially if they get a spot ETF approved, I would be surprised on the approval because they don't have the futures
Yeah.
data to go back on.
Exactly.
But I mean, the real tell will be if BlackRock comes out and files for a Solana ETF, in my opinion.
Yeah, I think that's where you
I
can
think
always be
that's
confident. Wherever Larry puts his bet, it's going to be a safe one. It's what pretty much me and Taylor, who run this podcast, said the entire time for the Ethereum ETF. Like, even when there was 10% chance of it getting approved, we said, I don't think this is the case if Larry's lining up to have it approved. I don't think he's going to take no for an answer. So, and I think the thing that people probably don't realise with the Solana one is, given they haven't had the futures one, or that they only just applied, is it can literally be pushed back, I think, to like May of next year for the deadline. So it's like, the SEC don't have to make a decision on that. I guess maybe the other thing is the fact that they've ruled it a security, haven't they? They have in some lawsuits, I believe. Probably.
I think in some lawsuits they claim that's a security, but we'll see what happens there, especially with the election. I
think the Bloomberg guys made that comment on that, or maybe some other analysts did, and essentially said, the fate of that kind of ETF really rests on the election. Trump gets elected, probably gets approved. Biden does, probably doesn't. But yeah, sorry, I probably believe I did cut you off. Were there any other narratives you did start, and then we?
No, you're good. I could talk endlessly about narratives, but I think, just back on the Ethereum things, like, I think once these S1s get approved and these spot ETFs start trading, like, I personally don't see a world where there's, been the most successful ETF launch in history, like the BTC ETFs, and then the second largest crypto asset is now available as a spot ETF. Like, people are saying that it's going to flop. I just don't see that happening.
No.
And like, people on Twitter are being, they're saying, we're estimating only 15 to 20% of the flows going into ETH as compared to like the BTC, ETFs. Well, okay, that's perfect, because if you look at the, the difference in market cap, 20% of the flows, or I think it's around 18% of the flows, will result in the exact same percentage move upwards in terms of market cap. So, like, I'm very bullish Ethereum, and I think once the Ethereum community feels rich, I think that's when the bull market starts. And like, I think there's definitely going to be like a bit more of a institutional, like, old money look at the, like previously, and even like this year, it's been very like PvP. It's been very just like meme coin driven, like narrative driven. It's like, you're not investing in businesses, right? You're investing in like some culture coin, or just a coin that's funny, like all this sort of stuff. Whereas like, there is actually now businesses in crypto that actually make money. So like some protocols, for example, Aave and Lido, they're close to profitability, or they are profitable. I think those coins, they're liquid enough that institutions can get into them, and they're also attractive from like an outside of crypto perspective, like a typical business structure.
So it's hilarious you say this, because for my service on Tuesday night, I ran about an hour live stream at 6 p.m. and all I did was go through ETH beta plays from the perspective of an institutional or traditional finance investor that more often than not invest in stocks. And obviously, what do they look for? PE, revenue, balance sheets and stuff. So what I did was I got up E&S balance sheet, or their revenue, Lido, like you mentioned. We looked at Maker and a few other ones, because I was trying to educate my members on kind of that marginal buy. Now, marginal buy is a funny way to put things, but like the marginal buyer post this ETF and what they would be looking for in crypto or blockchain projects. And it's exactly what you said, right? They're not looking for PopCat or Mishi or whatever it is. They're looking for an actual company that turns a revenue that's, actually looks strong from a balance sheet and income statement perspective, as opposed to speculation and just saying, the team's going to do this, but they're just running at a 10 mil loss per year. So it's really good you said that. And definitely think that's what people should be looking out for in coming months, if we can get to that stage where Ethereum feels rich and utilities being invested into again, instead of celebrity meme coins. Hopefully we can get back to that stage. Hopefully,
That's a terrible stage of the cycle. When the celebrities pop up in the timeline, I'm like, oh no,
Oh, it was
it's
hard.
just
The signs
it's
are
over.
there, but the inner board me just couldn't accept it.
Yeah,
um,
yeah, I'm the same.
Yeah, so I think we'll probably wrap things up there. I'll obviously, when I post this out on YouTube, Spotify, into the community, I'll pop on-chain outpost into there and crypto tax calculator. Was there anything else you wanted to say? Get out there to the world.
No, not really. I mean, just keep at it. You know, like the markets are red. It's a bit depressing, but
Yeah,
I truly, you know, deeply, I'm 100% invested in the space. Like,
yeah,
my career is going in that direction. All my spare time goes in that direction. All my money goes in that direction. So,
yeah. You
I
and I
mean,
both.
I'm very bullish.
Yeah,
I'm very bullish long term.
yeah.
So, yeah, hopefully people aren't hurting too bad, and can hold on for a bit longer, because there's definitely going to be, you know, some good days in the future.
For sure, for sure. Well, I think what we might do, even in 6 months' time, or maybe whenever the markets come back, and hopefully AI is heated, maybe we'll get you back on to reassess things and see how things look, and or just to see how AI is developed by then, because obviously each month that goes past is almost like a couple of years for AI currently right now with what's being developed and what comes out. But can't thank you enough for coming on, and appreciate it. And we'll see everyone next week. Thank you.
Awesome.
Thank
Thanks,
you.
Mitch.